I'm Boris. I'm here to share with you about my stock account update. Today, my stock account has earned $1,798. The U.S. Dow Jones Industrial Average closed up 100 points. For the first time in more than a year, the hedge fund net positions turned long from short, betting dollar gains. In my account today, right now the net asset of my account is $73,303.33. Today, UNG United States natural gas rose for $1,926, which is a gain of 7.2%. Right now, I sold my Unity software, and it has so far made a loss of $1,346.85. At the same time, I expanded my position of 1,100 shares of VIX, the CNN index that measures the people's short-term anxiety and stress. Right now, it decreased for 4.27% today to 3.81 points, and in the post-market it rose for 0.26%. As for the market today, market generally closed higher. Dow Jones Industrial Average rose for 0.3%, Nasdaq rose for 0.28%, and S&P 500 rose for 0.33%. However, the internet content closed down with a loss of 2.24%. All of the other industries showed a slight gain or minimal loss. CFRA Research Chief Investment Strategist at Sam Stovall said, "The market into a seesaw. One is thus because of signs of weakness on the Fed will soon end interest rates optimism. The other side is also because the economy still shows resilience and thinks that the Fed will be forced to continue raising interest rates and maintain high interest rates policy in a longer time." Treasury yields were higher on Monday, with the rate-sensitive 2-year yielding rise to 4.2% after better-than-expected New York manufacturing index shows the economy continue to expand, making investors more bet on the potential to rise further in June after the Fed raised interest rates in May. Traders also further lowered their expectations for a rate cut later this year. On the data side, the New York State Manufacturing Index rose to 10.8% in April, compared with negative 18.0. The New York Fed Manufacturing New Order Index for April was trading at 25.1, up from negative 21.7 last month. Another data show NAHB Housing Market Index rose to 45 in April, the highest since September 2022. Expected 44, previous value 44. On Friday, Fed Governor John Waller said the Fed needs to raise interest rates further, while the Atlanta Fed Chairman Jose Bostic said a 25 basis point hike could allow the Fed to end its tightening cycle. The market now expects a 25 basis point rate hike in May, up from 75% on Friday and a 21% a month ago, according to CE's FedWatch tool. Corporate earnings remain the focus. State Street closed down 79.3% as its fiscal first quarter met profit fell 9% from a year earlier to $550 million. Charles Schwab, in the midst of the U.S. banking crisis, closed 4% higher. The company's deposits fell 30% to $325.7 billion in the first quarter, roughly in line with market expectations. Schwab has been under pressure recently as traders worry that the brokerage could suffer a similar fate to Silicon Valley Bank and Signature Bank. The CFO said it expects deposit growth rate to resume in 2023. Bank of America and JP Morgan and Morgan Stanley will report earnings on Tuesday and Wednesday. Investors have been watching the overall health of the banking sector after the liquidity crisis following the collapse of SVB last month. In addition to financial sector, other leading companies reporting earnings this week include electric car maker Tesla and consumer goods giant Procter & Gamble. Last week got off to a good start with banking giants Wells Fargo and JP Morgan Chase was meeting the expectations, but dismal retail sales data shows that U.S. consumer spending slowed 1% in May, weighing on U.S. stocks on Friday. As companies grapple with their tricky inflation and rate background, many investors are ready for pessimistic earnings. But earnings may be better than expected, according to Bank of America. Of the companies that reported earnings in the first week, 90% of EPS beat expectations. Bank of America said it was at least the best first week of its earnings season since 2012. Morgan Stanley strategist Michael Wilson, one of Wall Street's most prominent peers, said the rally in the S&P 500 index was only driven by a few stocks, and that the index faces new lows if bond yields rise. Wilson said the percentage of stocks that outperformed the S&P 500 was the lowest on record. This is the market warning that we are not far off the bear market yet, strategists wrote in a report. For the first time in more than a year, hedge fund net position turned long from short, betting dollar gains. Investors' expectations of a Fed rate cut have receded, and hedge funds continue to bet on the dollar have financially reversed. Last week, speculators' major currency positions against the dollar shifted from net long positions to net short positions. For the first time since January, according to Commodity Futures Trading Commission, it also means the end of the longest weekly hedge fund bet on the dollar in nearly 3 years. Hawkish comments from Fed officials and recent economic data support a bullish outlook for the dollar. As of last week, the dollar index has fallen for 5 straight weeks, its longest losing streak since July 2020. But as of Monday, the dollar index has risen for 2 straight days, continuing from a year low in intraday trading on Friday. On Monday, the New York Fed Manufacturing Index unexpectedly turned positive from negative to April, surging to 10.8 in March, much better than expected at negative 18, and climbed for the first time in 5 months, boosting expectations of a Fed rate hike in May and pushing the dollar higher. On Monday, the dollar was supported by Fed Governor Waller's performance for higher interest rates to fight high inflation. In the past week, market expectations of a Fed rate cut have cooled significantly. Trading prices on Tuesday showed traders expect the Fed to turn to rate cuts as early as July after another rate hike in May, which market now is predicting a slim cut in September and a more likely rate cut in November. Overall, the market suggests the Fed could cut rates by about 50 basis points by the end of the year, compared with a forecast of about 65 basis points last week. Commonwealth Bank of Australia strategist said in a recent report that market pricing was an early forecast for a rate cut in November. Given high underlying inflation in the U.S., if economic data disappoint, even if the dollar continues to fall this week, it could recover in the coming months. But not all institutions are becoming bullish on dollar. Since last year, Wall Street forecast the most accurate analyst, Bank of America strategist Michael Harnett, recently believes that dollar has opened the 4th round of bear market. A strong dollar has become a past. In the U.S. government budget deficits or the debt ceiling deadline will come. Due to the combined trend of factors, the dollar index is expected to fall 20%. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.